Hey, thanks for showing up for the video today. Really quick. I was going over this with somebody earlier today, and we were talking. He's asking me, like, hey, do I think right now is a good time for real estate? And I was like, really, it's always a great time for real estate, but your strategy has to change. So when we're taking a look at real estate from my perspective, I'm a fund manager. I manage a fund. We look at institutional quality assets. We look at bigger multifamily assets, business level real estate, right? So, but he was talking about something different, but I wanted to share this with you guys because you guys are potential investors, right? You're looking to invest money and you want to make your money grow, or you want to put it in a place where that money is one protected, and second, it begins to grow. So the first thing you need to look at as it relates to real estate is concerned in picking the right real estate because your strategy has to change. Number one, if you're going to invest money with somebody like myself, you need to look at the operator. That's number one. What is that guy's strategy? Because like the person who was talking to me about real estate, he's thinking of a fix and flip strategy. That's a whole different strategy. That strategy right now for some people is doing well. For others, they're getting hammered. They can't get out of their deals. I talked to somebody like 2 weeks ago that has a property that's been on the market for like 3 months. I went to a neighborhood and I was like, oh, look at that property. And they're like, that property's been for sale for a year. Like, all of those strategies that people thought were great strategies at the time, when the door shuts closed on you as the operator, man, you're stuck in that deal. And if you're an investor, so you're an investor in that deal, you're stuck in it as well. So number one, we're looking at long-term hold-on deals, cash flow, income producing quality assets that make money when we close. That's what we're looking for, and a higher quality of asset. So, and I'll do this real fast. I'll show you guys. Like, this is an asset that, see, can you guys see that? Right here, I'll get closer. Boom. That's an asset that we looked at. Now, that is not a fixer-upper. That is an institutional quality asset, fully operational, will cash flow day one. It's already 97% occupied, has been for the last 4 years. It's still damn near brand new in a sick location in San Diego, downtown. So an asset like that is what we're looking to invest in. Now, if you're looking to invest in something else, that's different. But again, like I said, you got to look at the operator. What's he doing? What's he focused on? Is that a better place to put your money than a house that may or may not make you any money? But that's a place to put your money for 7 to 10 years. That's going to continue to pay you. And I promise you that property will be worth more than any house in 10 years. I bet you $1,000. Comment and let me know, because I know that one will make money, right? So number two you need to look at, which is what I was alluding to, is you got to look at the deal. First thing's the operator. What do they do and why do they do it that way? How are they going to protect our investors, their investors' capital or your money? Second, the deal. That deal is always going to be valuable, whether it's with me or it's with somebody else. Some insurance company, because that's who has it now. It's an actual institution that had that property with a group. Some other institution is going to want it. Some life insurance company, some pension fund, some other group that is in acquisition. They're going to always want that. They're not going to run out of money. It's not some doctor who does teeth or somebody who pushes on backs and puts people's spine back in place that's going to be able to afford that by themselves. That is not the game, right? So the deal has to be there. And then last but not least, then you look at the terms. Some people want to look at the terms first. They'll go, well, I can get more of a return. 5% is nothing. I can get 8% from this other guy. Well, a lot of people, especially if you look at what's going on right now, because I hear it over and over again. You just look at the news. Major syndicators have already stopped distributions to their investors. They're not doing distributions. As a matter of fact, if you take a look at, I think just recently, not that it's a whole different game, but Starwood Capital, Barry Sternlicht, they canceled redemptions. They're like, hey, you guys can't pull any more money out of what we're doing. So if you have major people like that playing the game and they're stopping sending capital to people, what do you think is going to happen if it's just some single family residential? So a lot of the guys out there who want to get these astronomical returns, I told you guys 4 years ago, the next wave is not going to be from foreclosures. It's going to be from people overpromising and they're not going to be able to deliver because they're being irresponsible with those terms. And now they cannot do that. I told you that's going to be the wave of opportunity. Those are the people I'm targeting. Those people have assets on a balance sheet. They have to sell because their fund has a shelf life on them. Like their fund is 5 years, 3 years, whatever it is they promised their investors. They got halfway through their plan. Now they have to take a haircut because the debt market is not going to allow people to get debt. And their investors already want their capital back and they got to pay them back. They don't want to lose that money. So they will forego the what's considered their portion, which is their GP, their promote, which is or their portion, which is 20% sometimes, 40% sometimes, whatever that is, they're going to forego that, lose out on their own equity, and they'll just let these deals go. That's the target. So that said, when you're looking at these opportunities, like I told my guy, it's a great time to buy, but you got to take a look at the asset and you got to take a look at your strategy. That means that's a personal thing for you. So Bell Capital for myself, it's always, hey, here's what I'm doing. Long-term hold 7 to 10 years, because I watched the door slam on a bunch of other fund managers and investors because they didn't set the stage for what they were going to do. And the window was too short. That's not good. That doesn't work when you're dealing with quality assets. These deals need time, right? They need time to mature. So that's number one. Number two, the quality of asset had to raise. No, the value add stuff that got played out, you can get the same returns on a stabilized asset as you could on a value add deal. And because rents are where they are. They're going to continue to rise over the next decade. We believe in that. We know that. And our investors believe in that as well. And last but not least, the terms. We have very simplified terms. Hey, it's an 80-20 split. We know that we're going to hit that. We are targeting a 5% return, 15% internal rate of return, and a double or triple on the exit further down the road. My goal is always refinance, give you your money back, and keep you in the deal so your returns are infinite. That's the goal. I can't promise that, but that's what I've done, right, in my past. But during that time, the goal is to send you guys a drip every month and you get paid to wait. Those are the terms. They're not, hey, I'm going to give you 8% pref, 12% pref, 9% pref. That forces a syndicator to be backed in a corner and to tell you that they cannot send the money, because the real estate hat is a living, breathing thing. They got to fund the real estate situation. Debts tripled during that time. Insurance costs went up. Cost of goods, so far as repairs, maintenance, all that other stuff went up. The whole world turned upside down, as you guys can tell, right? But that said, though, that's why you got to focus. You got a guy like me that's at the helm of the ship, that's pushing, building and running, and that's growing this major company, that is a fund manager that goes, look, it's a private equity fund. I'm going to manage those funds correctly. We're going to get the right asset, and we're going to be patient and wait. And we're going to get a deal that whoever our buyer is in the future is not going to run out of money. It's going to be another institution where we can package up our portfolio. We can sell it to an institution, and we can take it to Wall Street. So I hope that helps as it relates to, like, my guy's question was like, is this the right time? Of course it is. But you got to have the right strategy, right? Like we said, you got to have the right person at the helm, operator. You got to have the right asset. It's got to be a great asset, great location. It's got to be sick. And last but not least, you got to have the right terms for you as an investor to be able to invest and say, hey, that makes sense. This person isn't jeopardizing my investment, right? Because the name of the game is what? Preserve capital, don't lose capital. So that number one thing is there. Warren Buffett says it, Steve Schwarzman from Blackstone says it. That is the game, is to preserve capital. And you cannot do that if you overpromise and underdeliver on returns. So just be sensible about that. So if you're questioning out there, that's there. You want to know more about what we do, go to bell-capital.com. You can hit invest now, register your account. It's free. Doesn't cost you anything to register for the portal. You can take a look at our open fund, see if it's a fit for you. If you have questions about a personal scenario for you, whether you have money in an IRA, you want to know what it takes to be able to transfer that money and you self-direct, you can do that without penalty. You have money in an account, you're like, hey, how's this work for me? It's my personal situation. We're here to help you. Schedule a call, have a 5-minute call for myself, with myself or someone on my team. We're here to help. And all the paperwork goes over exactly what I just said today. Like, it's black and white, it's right there. It's what I've always done with my investors and my partners. And I promise I won't let you down. All right. So thanks for tuning in with this. Those are the 3 things you got to look for. It isn't really whether this is the right time. It is to make sure all these other 3 key components are in place, because if you do that with any deal, it'll work. I promise you. All right. So have a great day today. Like this video, share this video, comment on this video. Don't be a hater and a hider at the same time, man. Give it a thumbs up. Give it a thumbs down if you hate it. I don't care, but I want to hear from you. I'm here for you, and I appreciate you. Oh, subscribe to the channel. I'm going to be making more stuff for you guys out there that are interested in investing money in a place and you're looking for the right information. I want to share what I know, and my goal is to help you guys the best I can. And we're here for you over at Bell Capital. Okay, let's talk to you soon. Next video is going to be coming up. Let's go.